Now, as has been the practice, I shall be announcing some additional measures. This time I have 6 additional measures to announce to all of you, and these relate to banking regulation, fintech, and payment systems. First, we propose to enable securitization of stressed assets through market-based mechanism. There is already a mechanism of securitization of standard assets. The same is now proposed to extend with modification to stressed assets, and I may add that this is in addition and this is not in lieu of the existing ARC route under the SARFAESI Act of 2002. Second, we have guidelines on co-lending. They are presently applicable only to arrangements between banks and NBFCs. Moreover, they are restricted to priority sector loans. To exploit the huge potential of such lending arrangements, it is proposed now to extend these to all regulated entities and to all loans, priority sector or even outside the priority sector. Third, loans against the collateral of gold, jewelry, and ornaments, commonly known as gold loans, are extended by regulated entities, both banks and NBFCs, for both consumption and income generation purposes, in order to harmonize guidelines across various types of regulated entities to the extent possible, keeping in view their differential risk-bearing capabilities. We shall issue comprehensive regulations on prudential norms as well as conduct-related aspects for such loans. Fourth, to harmonize the regulations governing non-fund-based facilities across regulated entities, we propose to issue comprehensive guidelines. Instructions related to partial credit enhancement by regulated entities are also proposed to be revised. This is also, if you will recall, a budget announcement relating to NABFID by the Honorable Finance Minister in her budget speech for this year. This is expected to broaden funding sources for infrastructure financing. The draft of these 4 guidelines and regulations are being published today itself for public consultation, and we shall finalize these guidelines based on the feedback received. The other 2 announcements relate to, first of all, enabling NPCI to decide in consultation with the banks and other stakeholders the transaction limits in UPI for person-to-merchant transactions. This limit, as you are aware today, is 2 lakh rupees. We will give the freedom to NPCI in consultation with other stakeholders to revise it as per the needs of the economy. I may also clarify over here that the P2P transaction limit, which is 1 lakh rupees as of now, will remain the same, and there is no change with regard to the regulations in regard to P2P or person-to-person payment transaction limits. The other and the last measure that I have to announce today is regarding the regulatory sandbox. We are making it theme neutral and on tap. At present, there are actually 4 themes on which people and businesses can work on this sandbox. Now we are making it theme neutral and on tap. Necessary directions for the implementation of these 2 measures shall be issued separately. To conclude, the global economy is going through a period of exceptional uncertainties. The difficulty to extract signal from a noisy and uncertain environment poses challenges for policymaking. Nevertheless, monetary policy can play a vital anchoring role in ensuring that the economy remains on an even keel. In our context, as I mentioned earlier, the domestic growth inflation trajectory demands monetary policy to be growth supportive while being watchful on the inflation front. We are aiming for a non-inflationary growth that is built on the foundations of an improved demand and supply response and sustained macroeconomic balance. As before, we shall remain agile and decisive in our response and put in place policies that are clear, consistent, credible, and in the best interest of the economy. Thank you, Namaskar, and Jai Hind.